Welcome back, and joining me for a closer look at what's played out on the market scene today is Kearabilwe Nonyana from Scope Prime Africa. Thank you so much for your time, Kearabilwe. Let's start off there in the US. The Fed is concluding its two-day meeting today. What should influence the central bank's decision tonight?
I think when we got into the beginning of the year, we did anticipate that the Fed as actually was going to hold rates for the rest of 2025, or maybe have one quarter point to cut during the year. And I really think that at this point in time, with this new economic reality of having Donald Trump at the helm and at the decision making of the fiscus, it really does bring a lot of risk for the Fed at the moment. And I think they're going to take a wait and see approach on what the effects of these tariffs are. Do you know, Zinati, in my opinion, a tariff is a tax on the people. And for having such a strong economy right now, which is almost at full employment, and the previous fiscus was really still being very stimulatory within the economy, you have a very strong US economy, but right now it seems very precarious with this tariff tax on the consumer.
Well, we will hear from Fed Chair Jerome Powell on his comments, particularly on the recession fears that have been floating around. Well, let's get into our own domestic developments. We did have the South African inflation print for February coming out today, 3.2% in February, the same as was in January. Quite good news that it is at the lower end of the SARB's target band of inflation. Just talk to me about what stood out for you here.
I think this brings a little bit of fear to me, because this might let the SARB bring down the target band even a lot further, as the governor has been speaking. But I think what stood out to me was administered price inflation, and that's the cost of housing and utilities, which is just really energy prices, as well as how high food cost inflation still is right now in the economy. As much as inflation is coming down, the cost of energy and the cost of food still remains too high, in my opinion, and it probably is going to start affecting consumers on the ground. And now, considering the fact that we have a 50 basis points increase in VAT, yeah, I think it's really just going to add more pressure on a recovering consumer.
And actually, anything that could influence the SARB here tomorrow? Of course, it has its meeting tomorrow, where it will be giving us the latest interest rate decision, considering where inflation is at this point, but also maybe what the Fed could do.
I think the Fed does influence policy decisions here, monetary policy decisions here. But I think listening to the last two MPC meetings, the governor has been at pains to stress that inflation outlook is still very precarious in the medium to long term, and he cites this global trade war. And I think we are not going to be immune to this tariff hikes that the U.S. is going to impose, because that just means that as a non-closed economy, we're going to be a large exporter of some of these goods, importer, sorry, of some of these goods, and it's really going to put some the cost push inflation into our economy. So I think they're going to also take quite a cautious approach, and I think that the SARB has been ahead of the curve in terms of tightening policy a lot quicker than the Fed has, and they've given themselves space to cut rates tomorrow. But I think, looking at how hawkish our governor has really been over the times, I think he might take a cautious approach. I think he might hold at the next policy meeting tomorrow.
All right. Well, retail sales for January also came out. Quite interesting that we are in March now, but we're still getting data from January. So that climbed by 7% year on year in January. Of course, giving insight into the health of the consumer. I did note that the retailers were actually up on the JSE. Are they taking it as everything is finally coming together for the consumer that could benefit the retailers?
I think interest rate cuts, alongside the fact that there were two-part retirement withdrawals, really had done very well for the retailers. And I mean, the retail sales over since November have been seeing a tick up, and I think it's quite a surprise to see a 7% year-on-year increase in January, when usually after the December holiday break, retail sales do come down. But I think at the top end of our retailers on the JC, they've really done well, and this positive news has really fueled a bit of buying in that sector. I mean, you're looking at on the lower LSM sites, like household consumer good staples like Pepco, you're seeing ShopRite doing well, and I think even at such high elevated valuations, in my opinion, you're still seeing a lot of institutional interest, which speaks to the resilience, first of all, of our consumer, but two, the operational efficiencies of the retailers at the top end.
Well, maybe we didn't have January after all this year, Kearabilwe. Well, let's get into Tencent. I did notice that Naspers is in process earlier on. I'm actually not sure where they ended up at the end of the session, but they popped about 3% today. And I would imagine that is all because of Tencent that came out with its numbers today. Is Tencent proving that it is one of the tech darlings of our time?
I think it is, and I mean, I think to the latter part of 2024, we started to see that Chinese tech companies doing well, and Chinese companies in general doing well. If you look at the returns in comparison to the rest of the world, but I think Tencent has gotten it right in terms of cost containment. I mean, they had 11% rise in the top line, but a 90% rise in EPS, and they announced a quite sizable $10 billion per share buyback, which I think has really bolstered Naspers and process. But I think for me, what really is indicative of where the Chinese economy is going is the rise in capex. They have deployed more capital since the beginning of COVID in this next quarter. And that speaks to the fact that they are investing a lot in the AI. And that's where you're seeing a lot of improved growth and really a diversification of earnings. And I really think they really are proving to be a darling of our time, as you said.
Well, something that has not been a darling is PGM miners, but there seems to be some buying activity because I saw that JP Morgan today, Sibanye Stillwater let us know that JP Morgan increased its stake in the PGM miner. And actually yesterday, quite interestingly, I had a technical analyst that I was interviewing, and he was saying that he's picking up some amplats. And I'm wondering if the time is ripe then for some investor activity, buying activity coming back into these PGM miners.
I mean, this is truly deep value investing, in my opinion. I mean, Spain is coming off quite a bit of lows, but you've seen a lot of interest for it to get up to about 19 odd rand right now. And Spain is a bit different to the rest of the PGM miners because it has a bit of gold in its stable, and
Yeah.
a gold miners have high operating leverage during the time where gold has been seen to be touching 3,000, as well as the futures. The contango mathematics on the front end month contracts are looking so great. But I think right now I'd take a wait and see approach
Yeah.
in terms of PGMs, because there's been a lot of pain in terms of the basket price of all the PGMs, and you're seeing a lot of bottoms in terms of palladium as well as platinum. So I really am not one who's willing to touch it with a 10-foot pole at the moment, but I'm willing to look out and see. But we've seen a rebound in the price of Sibanya from 13 to 19, and that might be from the institutional investors looking at it as very, really deep value.
Yeah, all right. Well, where are you looking today? Your stock pick?
It's still in the mining space. You saw Resi 10 about 2%, and it's a diversified mining space, Rio Tinto, and that's because of looking at a report that came out of Goldman Sachs that iron ore is seen being bottoming out, and because of these new Chinese stimulus measure, you're seeing the price of high grade copper coming up, the price of aluminium going up, and I really think in terms of pricing, it's sitting at about 10.84 PE, which I think in comparison to BHP Billiton would be a better entry and more value for investors.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today, Kearabilwe. That was Kearabilwe Nonyana from Scope Prime Africa.